Hey folks, in this video we are going to look at where gold prices might be headed in the future. I have 5 gold price prediction charts for us to look at today. I want a caveat up front, we're just spitballing here. There's no investment or trading advice intended in these charts. I find that for myself, the charts, seeing ideas depicted visually helps me, and so that's the intent with these charts. They're thought tools, and we can make our own opinions and factor them into our trading strategies and investment plans. And so, just that's what we're up to today. In each of the charts, each chart will use one of these 5 prediction methods, and we'll get some price targets from each one, and then we'll consolidate from all 5 charts. We'll get this table of all of the predictions, and we can look at them, make whatever decisions we might choose to make from that data. And so let's jump right into the charts. I'm going to start over here. So Andrew's pitchfork obviously has 2 variations. There's the shift pitchfork and the modified shift pitchfork. And let's just show them. So this is the original Andrews pitchfork, and so if we look at the slope of this median line, we can see that it's fairly steep. Price can rise at that degree of steepness, but that's a pretty steep price rise. The Schiff and modified Schiff pitchforks have a much gentler slope. And so if we want to be conservative in our price predictions, it's better to use a Schiff or modified Schiff pitchfork. In this case, I've got a Schiff pitchfork. It's doing a pretty good job of describing the price action. So, we get this pivot point, and then, a little bit of a rally. Price didn't make it up to the median line. We bump along, then we test the lower median line, and so that test gives me a little bit of confidence in this fork. And then we get some interaction here at the median, the central median line, obviously. And now it looks like this correction that we've been in, this 4-month correction, is finding support at or just above the median line of this shift fork. And of course, the expectation that we're going to head off into another big rally heading into 2021. And so in Andrew's pitchfork terms, our next price target becomes the next median line, which in this case it's the upper median line of this shift fork. And so if we just kind of eyeball, if price were to continue this trend, which again is fairly steep, that's a fairly steep trend, the intersection of that trend with this median line gives us a target up here in 2320 or so, and then we can come down and look at, okay, in the calendar, when might that occur? And so that's what I've done in this chart. I get those 3 targets. Let's move on. And let me point out that in all of these charts, we are looking at the monthly time frame. I wanted to eliminate as much noise as possible, so focused on the monthly time frame. And so here we're looking at the head and shoulders continuation pattern. Some people call this the head and shoulders bottom. There, probably every technical analyst is going to draw the neckline of a head and shoulders pattern differently. I, I chose to draw it here. I prefer to leave the whiskers or tails outside of support resistance lines, and of course that's what we're assuming this neckline is a in this case a resistance level. And so the idea here is that we've got, there's our first shoulder, this is the head, and we're working on the second shoulder here, and it's likely to be, this is my bullish bias, it's likely to be kind of a skinny shoulder because I expect price to push above the neckline in 2021, short order. So what we do for price prediction with the head and shoulders is that we take the height, the maximum height of that pattern from the neckline. And so even if the neckline is sloped, as it is in this case, we want a vertical line at the highest point, the maximum distance from the head to the neckline. And so that's what we've got here. And then we duplicate this line, copy it, and then paste the copy up above the neckline to get our target. Now, some people will draw this neckline more like that, and they get a target more in the $3,000 range. And so I prefer to be a little bit conservative, and so 2765 looks good to me. This is a Fibonacci extension of the previous big rally, 99 to 2011. And so with the Fibonacci extension tool, what we do is we pick three significant pivot points. And so this is the start of our rally, the top of our rally, and then what we believe to be the bottom of the subsequent correction. And so that gives us ABC, our three pivot points. And then the Fibonacci extension tool lets us predict where D might occur. And of course at D we not expect, the probability of a price reversal or at least a pullback increases as we approach these Fibonacci levels. And that's why we draw that's why we use the tool. And so there is the possibility that we have already completed this pattern, that the high in August of 2020, that was the top of the pattern. Now personally I don't believe that that's the case at all. I think what we're seeing is that price reached the 0.618, the 62% extension of this pattern, and now we've had a 4-month correction, and price is going to head off to greener greener pastures above, with our next target at 2357 in the Fibonacci extension chart. And so there's our three targets. 2713, that would be a 1-for-1. So if we duplicated this size rally, that would get us to 2713, and then 1.618. That's another higher probability. If price wants to go even higher than 1-for-1, this target could come into play at 37.44. Let's continue. This chart's a little bit messy. Bear with me, I think I can explain it. So in 1969, gold was sitting at $42. By 1980, gold had risen to $875. That is a 2,083% gain. And I don't know about you, but I always get confused when people talk in percentages like that. And so, what makes more sense to me is to think of, okay, I have my starting price. How many times did it multiply? And in this case, it's 20.83. 42 times 20.83, 875. Our last big rally was 1999 to 2011. We got a 762% gain, or an increase of 7.62 times. Took us from 252 up to 1920. Now, again, I believe that price in gold bottomed in 2015 at 1046, and that now we're in the next up leg of a secular bull market in the precious metals. And so if we go, now we're going to do this part of the chart, we're doing prediction. So if we were to get the same kind of increase on a percentage basis starting at this 1046 bottom, a 762% gain gives us a target at 7970. And I'm just, again, I'm spitballing, and picking 2026 just because. No better reason than just because. And then a 2,000% gain gives us target at almost 22,000. And again, I'm just picking 2030 just because. And let's continue here. This is a parabolic curve. It's not really all that parabolic. It would a real parabolic curve is going to get steeper and steeper. But that's the idea that I'm depicting in this chart, is that as we move forward in time, gold will continue to accelerate in this secular bull market. The price increase will continue to accelerate and will ultimately go parabolic. And of course, parabolic trends end very dramatically, but all well and good until that happens. And so, on this chart in particular, I want to point out, swag. If you don't know what that stands for, that's a scientific wild-assed guess. And so I'm just playing here. I threw a curve tool on the chart and just kind of moved it around to make it sort of fit. And then did the same trick. It's okay, at what point might price intersect the parabolic trend line in this time frame? So actually, in this case, I started from a time frame and found the price. And that's what we see here. Can gold actually get up to $21,000? Who knows? We'll see. There are certainly numerous people predicting those kind of prices. Again, we will see. And then, so the final thing, when we consolidate all of our results into one table, this is what we get. And I'm really interested, for myself, I'm interested in the closer end targets, and the ones that have a little bit more science to them than others. For example, as I was just saying, the parabolic trend line, I'm really just swagging there, and so I don't put a lot of credence in those numbers. In contrast to, I feel pretty good about this fib extension. I mean, we see, let's go look at, just so not, what I'm referring to. Price came up here in August this year and just bam, hit that 62%, 0.618 Fibonacci extension, and then that, we subsequently got this pullback that I believe has ended or is ending. But when you see price hit a target like that, it's reasonable to assume that this tool is accurately describing the price behavior. And so that's what I'm going to assume, is that this fib prediction is certainly more accurate than the parabolic trend line, and somewhat accurate in general. And so what I notice is that we have two clusters of targets. We got, 2300 ballpark and a 2700 ballpark. And so there it is from the fib extension. The head and shoulders gives us 2700. There's Andrew. Actually, it's a shift pitchfork, being a variation of Andrews, gives us target at 2320 and almost 2900. And so anyway, we've got several methods that are suggesting targets at, let's just call it 2300 and 2700. And so that's interesting from this data. And of course, just me off the cuff, I'm expecting to see 2300 in 2021. That's my next price target, and I'm, like I said, expecting to see it in 2021. I'm going to stop. Have a fantastic day and week, folks. Bye.